Howdy. Welcome back to Dion Talk. The 2021 housing correction. It's really hard to make a video like this and stay unpolitical, if that's a word. Apolitical? But here goes. Here is a video that I had come out in January of 2021 where I was talking about no housing crash. Around the same time, there were all of these videos that were coming out on channels that kept talking about how there was going to be a housing crash in 2021. The videos that talked about a housing crash got a lot more attention than my video that said no housing crash. And I get it. As investors, we want to find videos that give us that confirmation bias that we're looking for. We want our hopes confirmed. And as investors, most of us hope for a housing crash, or at least a correction, so that we can buy properties on sale. And when things are appreciating as fast as they have in 2020 and 2021, even prices going back to where they were 6 months ago can feel like a huge discount. And here we are, halfway through 2021, and there's still no housing crash. Prices continue to skyrocket. There's about 400 markets in the United States, and in most of those markets, it's really hard to find a good deal. Most investors actually feel priced out of deals that make any sense. So while I'm talking about a housing correction, I don't see prices dropping significantly, and I don't see the things that can cause a crash. I still stand by my video from January. We don't have a lot of ninja loans, no income, no job, no assets. We don't have a lot of adjustable rate mortgages where people are going to be priced out of their ability to make their payment if rates go up. And most people have equity. So even if they have to sell, it's probably not going to end in a foreclosure. And while some people are able to get the data on how many people are taking forbearance, there is absolutely no way to get the data on how many people on forbearance, meaning they're not making their mortgage payments, are doing it because they had to, because they were impacted by COVID, or because they're just wanting to save money and they felt like doing it. And there is another major difference between 2008 and 2021 when it comes to forbearance. In 2008, a lot of people on forbearance at the end were forced to make one payment to catch themselves up for all of the missed payments, and not a lot of people were able to do that. In 2021, the difference is most lenders are adding those missed payments to the end of the mortgage. So the only way that the borrowers are going to have to pay all of those missed payments is if they sell the property, refinance the loan, or pay the mortgage off. And yes, there is always the chance that some properties will go into foreclosure. This happens in years where there's a pandemic or years where there's not a pandemic. But when that happens, in many places it takes up to 700 days for a foreclosure to go all the way through, which, if we start now, doesn't impact 2021 or 2022. And I understand that there are some people who are frustrated by the words I'm saying because I'm not confirming that there's going to be a housing crash. And some people say, but there's a pandemic, so we have to have all these people not working, so there's going to be people who can't pay their mortgage, and we're going to have all these foreclosures because that really backs up what they're hoping for. But we've had extended unemployment, extra unemployment, stimulus, and the unemployment rate the day that I'm filming this video is 6.1% in the United States. So here's why I see a housing correction coming. And let me be very clear, this is not a political opinion. It doesn't matter to me who's in office. As an investor, it is our job to make a plan that works whether somebody from the left or somebody from the right is in that office. And someday I might make a video that talks about whether I'm on the left or the right side of politics, but not today. Not all investors base their decisions on data and facts. Many invest based on how they feel. And while I don't agree with investing on emotion, it does happen. This year, there's been a lot of talk about raising the capital gains tax on the highest bracket from 20% to 39%, and talks about removing the 1031 exchange. A really quick Cliff Notes version of what capital gains and the 1031 exchange are. Capital gains is the profit from the sale of an asset that we've had for longer than a year. A 1031 exchange is when we take the profit from the sale of an asset and reinvest that profit into another asset. Some of the rules are that the asset has to be the same type as the one you sold, and what this does is delays paying taxes on that gain until we sell the next asset, which could be 1031 again. And there are so many rules and regulations when it comes to capital gains or 1031 that I guarantee you will benefit from working with a tax professional if you're dealing with either one. And these talks have focused on this only impacting people who make a lot of money or are doing a sale above a certain amount. But remember, a lot of investors aren't going to look at the facts. They're going to make decisions based on how they feel. Investors who have been on the fence as to whether they want to sell or not are now motivated to sell before they lose the possible tax benefits that even have the slightest chance of going away. Currently, most markets are a seller's market. The reason is because in a balanced market, we usually have about 3 million properties on the MLS. For the last several months, there's been around 1 million, meaning that we have about 1/3 of the number of properties it takes to balance the market. This lack of inventory, while there is still strong demand, is why there are so many competing offers on each property. A lot of them go for tens of thousands above asking price. Some are waiving contingencies like an appraisal or an inspection clause. Buyers are trying to do whatever they can to get the seller's attention. As more and more investors who are thinking about selling get nervous about possible tax changes, we're going to see more inventory. I don't think we're going to see enough to cause a crash because that would take literally millions, but I do think we're going to see enough to cause a softening in at least the competition for each property. This can mean less offers for tens of thousands above asking price, less waived contingencies, less madness. Yes, less madness too. And for those few people out there still convinced that prices have to come down because people can't afford to keep paying this much for properties, there are two things that are also raising the price of these properties. First, low interest rates. The lower the interest rate, the higher the payment a person can make. And second, 40-year mortgages. If we stretch the mortgage like a lot of lenders are starting to offer into 40 years, that means the payment every month will come down, allowing the person to pay more for the property and continue to pay the same on their mortgage. I think this is what makes it crucial for investors to do what Michael Zuber from One Rental at a Time says: do the work. Be looking at properties every day. Keep hunting for good deals and make offers when it makes sense. Making sense means you will get the cash-on-cash return that you're looking for in your market. It is always a good day to buy a great deal. While you're hunting for those deals, keep saving. The more money you save for down payments, closing costs, immediate repairs, and reserves, the more options it will open up for you. Ultimately, it shouldn't matter what happens with taxes or who's in office. It's a good investor's job to come up with a plan and strategy that works for whichever way the wind blows. In the comments below, let me know if every day you're hunting for that next amazing deal because you want the cash flow and appreciation and principal paydown that will happen when you find one. Or if you have a really good reason why you're waiting to invest, let me know. I'd like to hear it. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.